Hello, everyone, and welcome to another episode of the Radical Hospitality Podcast. I'm your host, Zeke Freeman, and today we have a special guest who's making significant strides in the boutique hotel investment space. Joining us is Rich Sommers, the founder, CEO of Sommers Capital. It's a vertically integrated boutique hotel investment firm. Rich is also the host of the Sommers Report podcast, where he interviews top entrepreneurs as well and investors around the world. Additionally, he organizes the Beers and Deals, which is the largest real estate networking event in San Diego. Welcome, Rich.
Zeke, I appreciate you having me on, my man. I'm a big fan of everything you're doing and excited for this podcast, this conversation today. And even more excited, I get to meet you and your wife, Amy, next week at our holiday event out here in San Diego, man.
We are super excited to get out there. We've got a couple of feet of snow here in Denver, Colorado. We've enjoyed getting a couple turns on the mountain early, but even more excited to make it out to the sunny beaches in your neck of the woods. So.
We got 74 and sunny this weekend out here in San Diego, so maybe you guys get a little sunshine next week, my man.
Yeah, sounds good. Well, I want to hop right into it. So let's talk a little bit of mindset, if you don't mind.
Let's do it, man.
So, all right. So you have said money loves speed and poverty loves indecision. Could you break that down? What's it mean to you?
I wish I would have known this sooner. A lot of business, a lot of entrepreneurship, a lot of growing from a business perspective is identifying what you're good at and doubling down and doing more of what you're good at, and then doing more of what you're good at until a bottleneck arises. And then you should take all of your energy to go remove that bottleneck and then get back to doing more of what you're good at. And so this applies to everything. So I always say the faster that you can act, the faster that you can take action, the quicker that you're going to win in this game, whether it's a new idea, a new implementation, a new pivot. The second that you have identified a way that your business is going to operate at a better manner, that's the second that you should implement it, right? The rest is all just emotion in this game. And so whether you're removing an arm of your business so you can double down on what you're good at, or you're implementing a new arm, the sooner that you can act on it and the shorter that you can shorten that gap between idea and implementation, the quicker that you're going to win. It changes everything. I always say this. If you wait till you have all the answers in this game, it's no longer an opportunity. And that's both buying real estate deals. Think about a good deal that you might, be looking at. And let's say there's a couple other buyer groups. If you take your time and you hesitate, someone else might lock up that deal. And then all that time that you spend didn't even matter anyway. So I always say, act quick, money loves speed, poverty loves indecision.
As an architect, I tend to spend a lot of time analyzing and making sure T's are crossed and I's are dotted. How are you making sure when you're pushing things fast that you're not making those mistakes?
The truth is I'm making hundreds of mistakes every single week. I literally am making hundreds of mistakes every single week. And I think a lot of folks don't get started or they hesitate because they're afraid to make all the mistakes. I was in a partnership prior to going on my own. And one of the reasons why that partnership was not aligned is because we had a different perspective in terms of risk tolerance. And I think ultimately, I'm okay making mistakes because I had the confidence in my team. I had the confidence that we have the correct resources that push come to shove. We can go out and figure out a solution to any problem. And problems are going to pop up left and right. We had one of our hotels flooded out in January this year, 30 days after we did the grand opening. And so problems are going to arise. It's part of the game. But how you pivot and how you problem solve is the key. You got to have some sort of confidence that you can get from point A to point B and problem solve when those problems arise. And if you don't, this game's just not for you.
I also hear you talking about it's a lot about getting the reps in and getting out and doing things. And sometimes you learn more from mistakes than you do from the wins.
I tell my team all the time, in this game is a lot of decisions that need to be made. And every decision was like a 4-hour, 5-hour, maybe a week-long meeting to make one decision. Now with my team, I tell my team members all the time, guys, I don't care if it's the wrong decision, just make a decision and let's roll with it. Either it's the right decision and we're going to win from it, or it's the wrong decision and we're going to learn from it. But in the same week that someone else has maybe taken a whole week to make 1 or 2 decisions, we're making 40 decisions. And not all of them are going to be right, but think about that compounded over weeks, over months, over years. The knowledge and the wisdom that you gain from that is not even close to the other group that's maybe taken an entire week to make one decision.
I feel like a lot of that begins to, come down to a level of intuition. Then if you're making those, then, your gut is able to make those things faster. When you're getting ready to hop into a high intense, heavy decision-making role like you do on a daily basis, what are the things that you're doing to prepare your body and your mind on a daily basis to get ready for being quick and decisive?
Well, the first thing is, you got to take care of your body and your mindset. Okay. So, one of the things that I think is the biggest life hack that nobody talks about, eliminating or really reducing your alcohol intake. I'm on almost 100 days sober right now, and I'm going to keep this thing going. I might keep this thing going until next summer. I never took a break from drinking ever. And until this year, I'm 39. I did 76 days sober earlier this year. And I drank a little bit for the summer, and then I came back to it, and I'm on a 100-day stretch, and I'm like, dude, it is the biggest game changer. So that's number one, working out, taking care of your body. I work out first thing in the morning, man. It just gets me juice, going to bed early, and just having a fresh mind. Everything that we're playing in this game is about calculated risk. I mean, we're buying real estate deals. We're raising money. We're getting debt on these deals. There's a lot of assumptions baked in terms of the return profile and all the decisions that we're making. It's all calculated risk. But I think it all starts with the mind, keeping your body fresh. And if you keep your body fresh, limit the alcohol, you can make a lot more decisions and be quick with these decisions. And again, it's all about the reps. It's all about the at-bats. And I think the more decisions and the more reps you get in, the better you get.
It wasn't too long ago, we implemented, marijuana to be legal in the state. And my always thought against that, not that I had an issue with people smoking marijuana, but what is the net loss that we've had as a society and community?
Yeah, and you know what? There's no fault to anyone that enjoys drinking or knitting the marijuana, whatever that substance is for anyone. I don't fault them. I think everyone should be into whatever they're into. But what I'm saying is I believe that at a certain level, when you grow as an entrepreneur, you reach a plateau to where you're like, hey, this is like as far as I'm going to go. If I'm going to be drinking and doing all these different substances, going out and having a social life, which I think balance is important. However, when you get to a certain level and you look at the next level above you, you realize that a lot of these players are not even drinking. A lot of these players are in bed by 9:30, 10 o'clock every single night. And these guys are, operating at 110% capacity from sunrise to sundown, 365 days a year. And so the difference between someone that's doing that and someone that's going out and drinking socially 2 to 3 times a week, that means that you're operating at 40 to 50% capacity the following 2 to 3 days per week. And that compounded over a 365-day year is the difference from someone making it to the college basketball level and someone becoming Kobe Bryant, becoming Michael Jordan.
It might not be, weed or alcohol. I mean, it could be a W-2 job. I know you had a season of your life.
Yeah, I was one of them.
So you had that season in life, and I know there was a wake up that really pulled you from one position as an air traffic controller to what you're doing now. What was it that kind of clicked, and how was that season for you?
I did 11 years as a air traffic controller, Federal Aviation Administration. It was a fun career. I really loved it, and I thought I was good at it. There's a certain personality that molds with that job. There's a certain adrenaline rush that comes with working a busy session of airplanes, and you got to be quick. You got to be fresh at that job. There's a high washout rate, and I loved it. I did it for 11 years. But I got to a point where I was like, man, there's got to be more to life than just this. I got to a point where I felt stuck. I felt like I needed more. And I was like, what is that next thing? It was the first time in my life where I wasn't working towards any goal. Like my entire life, as a kid, we go to elementary school and then middle school, and we're working towards some sort of goal. And then it's like high school and then college. And then again, his career, and I'm training, and then I get done. And then I'm like, okay, I want to transfer to another facility, get back down to San Diego, and I train all over. And then I got done down here. And I'm like, okay, well, what's next? I'm like, is this all I'm going to do for the next 25, 30 years? And that's when I started questioning. I started asking myself questions. I was still relatively young. I overheard a coworker in the break room talking about, hey, he just closed on a fourplex in Cleveland. And I thought it was the coolest thing ever. And I was like, how did you do that? And he goes, go read this blue book by Brandon Turner on real estate investing. And he said, go listen to this podcast. It was the Bigger Pockets podcast. And I read the book, and I just started binge listening to podcast episodes on different real estate investors. And I just became obsessed, man. I started reading more books, and I gravitated towards commercial real estate and specifically multifamily. And 9 months in, I did what a lot of society will tell you is too risky. A lot of my coworkers, a lot of my family members told me it was too risky, but I cashed out my 401k. And I used that as my seed money to buy my first deal. My first 2 deals. My first deal was 11-unit multifamily deal in Cincinnati that I still own today. Bought that thing for $350,000. I took the rest of the money and I bought a 32-unit building in Indianapolis with my 2 partners at the time. One of them was that guy Mike in the break room, and the other one was another air traffic controller. The three of us all cashed out our 401ks, and we went on this 32-unit building in Indianapolis, C-class building, value add, bought it for 1.1, renovated half the units, and 2 years later, we exited at 3.1. That was my first big win in the real estate space. But shortly after that deal, man, I ran out of money, and I didn't have any money. And so I started a podcast. I got around people that were doing bigger deals. I got around the right mentorship, and I ended up co-GPing a couple deals with the right mentorship. John and Tony Azar, they're out of Southeast. They've owned and operated about 6,000 apartment units out of Charlotte. And I ended up doing a couple larger deals with them. And that's how I learned how to raise private capital. That's how I learned capital stack. That's how I learned how to underwrite bigger deals and size these things up. I learned asset management, all that sort of stuff. And that's really what ultimately got me in the game. And in the beginning, I couldn't sign on my own loans. I didn't have the net worth. And so we had to partner and we had to bring in loan guarantors, all that stuff. But fast forward today, we control $80 million of real estate. I have the net worth to now sign and be the sole guarantor on a lot of these loans. And it's really changed my life in so many freaking ways, man. And I'm just grateful for it. And sometimes I wake up, I'm like, man, like, what did I do to deserve this? But the cool part is this, Zeke. I tell my team all the time, I'm like, the growth that we've seen in the past few years is great. But if you really think about it, man, the bar has never been so fucking low. Like, to think that 6 years ago, I knew nothing about business, nothing about real estate. 2.5 years ago, I knew nothing about social media and the content game. And it really goes to show that, the bar is really damn low for those who truly want it. And so I tell my team all the time, and I tell you guys this all the time too. I'm like, man, this is just the fucking beginning. When I say that, I mean that. Like, we're just getting warmed up.
I love that. You hit on a lot of things in there. You talked a little bit about mentorship. You talked a little bit about partnerships, and then getting around other like-minded people that are actually making some hits. While you were listening to the Bigger Pocket podcast, I was doing the same thing in my architecture office, working for the man. And, that helped me make a transition in that season of my life from, working for an architecture firm to, we did the same thing. We cashed out a 401k. Ours wasn't as big. So we finished fixing up and flipping a house, but it was a little bit of seed money to start our own company. And then, we started to build upward architecture. We've taken the slow route in comparison, but, it's been good. And it's been really blessing for us to get out there and, build a company and slowly start to build some real estate. And we're in the moment right now where, we're starting to make the investment into those mentorships and getting around the right people that are doing big things. Because we're in that season where it's time to start doing some bigger things. Maybe talk a little bit about what you guys are doing with your mastermind group and how you're helping other investors, step into that.
Yeah. So, as you know, we have a really awesome community in the boutique hotel space. We have about 65 members, all truly inspiring, forward-thinking individuals that are moving the needle. We're very selective with who we let in the group. As you can see, like, everyone in there is truly moving the needle in the real estate space. All action takers. 41 hotels owned collectively amongst the group. 8 hotels currently under contract, partnership opportunities. But I'm just lucky to be a part of it. Inspired every single day. We bring on badass guest speakers on Tuesdays, all sorts of different folks. We got Carlton Dennis coming on next week. He's going to be at our holiday event next week as well to talk tax strategy and a lot of the stuff that he sees post-election in terms of changes and all that sort of stuff. But man, I'm just inspired to be a part of the group, dude. It's an amazing group to be a part of.
When you were growing your real estate portfolio career, you mentioned a couple of mentors. Were you also had you ever been a part of a membership or mastermind group as well?
Yeah, of course. I'm in a handful of masterminds as a member. I'm a big fan of it, of these mastermind groups. It's a great way to shortcut the path from point A to point B. I also have a business coach that I meet with every single Monday for an hour. We talk shop. He lives in Boise, Idaho. He flies into town every single quarter when I do a quarterly meeting with my team, and he'll be in town January 6th and 7th next year to do a 2-day annual meeting. And so I'm a big believer in paying for mentorship and coaching at every single level. Every single high performer out there in the game, whether you're an entrepreneur or you're a professional athlete, has coaches at every single level. And that's really the secret to success. I mentioned earlier in the call, when I cashed out my 401k and I bought those first 2 deals, I was out of money. The best thing that I did was get into mentorship. John and Tony Azar, they don't have any sort of like mastermind or anything like that, but they come on the podcast, and I ended up doing a mentorship with them, paid mentorship, and these guys are the ones that taught me everything. And not only did they do that, but we ended up co-sponsoring 2 deals with them that we still own today. The Arbors Townhomes in Greensboro, North Carolina, 150 unit townhome community, and the Timber Creek Apartments, 145 unit multifamily property, garden style. But both of those 2 deals, I would have never been able to get done without them. And so that got me in the game, and it's changed my life. So a lot of those principles that I learned in that mentorship, even though that was in the multifamily side, gave me the confidence and the knowledge to go out there and do this with Sommers Capital now on my own.
So, I mean, real estate can be you got to invest, and you're oftentimes waiting for a long period in terms to get a cash flow or money back. I know you currently have been building out a team and doing management as well as buying boutique hotels. Has that played any part in it of just building some cash flow? Or is that something that you recommend for people getting into hospitality or development, to have some sort of cash flow building piece? Or do you think you kind of just go from project to project? What's your recommendation for
you gotta have some sort of active income in this game. I don't care what asset class that you're investing in. If you're going to invest in real estate and that's going to be your full-time thing, you better have some sort of active stream of income that wraps around that business in some form or another. It should not be in a completely different vehicle. It needs to wrap around at some form. So yeah, I mean, you could do property management if you like operations, that's your forte. Personally, I don't love operations. It's not my forte, but we do have a property management arm. I try to stay out of it as much as I can. I love the art of the deal. I love the media side. I like building the personal brand. I like finding deals. I like talking to brokers. I like raising capital. The capital development piece is a big piece, as well as the deal development piece, right? And so if you're listening to this right now and you're like, hey, I think I'm going to buy some real estate investments, I'm going to quit my job and live off of the passive income, you can do that. But for me, what true happiness means for me, Zeke, is growth and progress. And so, I could, before I started Sommers Capital and all that sort of stuff, I could have theoretically just sat on the beach and literally just lived off of the Airbnbs, some of the multifamily stuff. But I'm like, dude, I would get so freaking bored, and I want to build a big thing. And so in order to do that, I need a freaking team, right? So I got payroll, I got a lot going on. And so in order to like really build this thing, I need active income. Parking money into these long-term projects, 7 to 10 year holds. A lot of the payday is at the end when you guys sell these assets. And so for anyone listening to this, if you think you're going to get in real estate investing and you're going to do it full time, you need to find some sort of active income. There's a lot of different ways you could do it. Property management is just one way. I mean, look, you got your own architect arm, right? That's your active piece of income. And here's another thing. I love having investors, but like if you have a really strong active stream of income, you can buy a lot of your personal deals and fund a lot of your deals with your own equity, and you don't need to have all these partners and investors. And so, yes, we love taking down the bigger deals with our investors, but I also do a lot of personal investing on my own with smaller deals that I can take down on my own without investors, without partners. And, that's the true name of the game. Like syndicating is great, but like I tell everyone that syndicates, I'm like, guys, the end game is you need to own your own real estate too. So you should be taking everything that you're making and be buying your own individual properties as well, because that's how you truly build wealth in the end game.
You mentioned partnerships a lot in that, good ones, some bad ones. When you are building your real estate portfolio, what do you recommend when you are building those partnerships? What makes a good partnership? What doesn't?
Real quick, and it's 3 things that makes a good partnership, and I'll allude to these 3 things in here in just a sec. But I had one partnership with the 2 guys that I bought that we all we all cashed out our 401ks, and we used real estate as a vehicle to quit our jobs. We all successfully walked away from government pensions. Like no one leaves the air traffic job. You do 25 years, you get a cush pension and benefits the rest of your life. So no one leaves that job. And all 3 of us successfully cashed out our 401ks and used real estate as a vehicle to get out of our jobs. And so that was a successful partnership. We still own real estate together. I love those guys. We're just not aligned to work together. Now I'll say this, when I'm looking for a partner, or anyone listening to this looking for a partner, it's 3 things. It comes down to, number 1, are they a good human being? That's first and foremost. If they're not a good human being, I'm not going to work with them, because at the end of the day, your partner is a representation of your brand. So how do they talk to servers when you guys go out to eat? How do they talk to vendors when you guys go out? How do they talk to strangers? Do they say hi? Are they polite? Are they a good representation of your brand? Are they honest? That's number one. If they're not that, then I'm not going to consider it. Number two, you got to have a similar level of risk tolerance in this game. And I alluded to it at the top of the call, but if your level of risk tolerance is not similar, it's never going to work. So if someone has a higher level of risk tolerance, meaning they have more confidence, they have the ability to go out there and just have the confidence that you're going to have, now, not reckless. When I say high level risk tolerance, I don't mean reckless. I mean, you have the confidence that push come to shove, when things pop up as far as the put out, that you have the resources to problem solve and push through and get through on the other side. Okay. And if they don't have a high level risk tolerance and they have a low level risk tolerance, it's never going to work, because you guys aren't going to be able to like agree on a lot of stuff. And so similar level of risk tolerance, making sure they're a good human being. And then the third arm, which is, maybe the most important arm, is this: a successful partnership, you need to have complementary skill sets. So for example, if I'm good at raising capital and I'm good at talking to brokers, I'm good at being the marketing arm, I'm good at being on social media and building our brands, and I'm good at sourcing deals, I'm not going to go partner with someone else that's good at that. I need to go partner with someone that's going to do the stuff that I don't want to do. What are the things that I personally don't like doing? Operations, asset management, underwriting. That's really a different avatar. The people that are good at underwriting, they're good at like looking at the numbers and operations, all that sort of stuff. Those typically aren't the same avatar as someone that's going to be out there building the brand, meeting brokers, raising capital, and building relationships. It's typically two different personalities. They can be one, but typically it's two. So partner with someone that has a complementary skill set, and that's the way to go.
I'll say, even I'm guilty of this. I think a lot of people, you tend to partner with people that you get along with and associate well, and that might be similar skill sets, but it might be intuitive, but it's really not that helpful when you get into a partnership. You need somebody who's got complementary skill sets. So brand, I know you mentioned that a few times. Every person, and I talk about that in root architecture. Like, you guys represent our team, the root architecture brand. When you're showing up to a client, like, you are the face of root architecture. You need to be showing up with, we call it radical hospitality. Is that way that we serve all of our clients in a way that absolutely blows them away. I see that with your team. Everyone shows up in black. When we joined in, incredibly responsive. I haven't seen a whole team like yours where we send in a text. I immediately get an answer, and so there's some responsiveness that I see in that. What have you been doing to build your brand, and what are important things to you about your brand?
Yeah. So first and foremost, the brand and your reputation is the most important thing, because once you lose that level of excellence or the reputation, you're going to lose a lot of trust. And so it takes years and years to build the trust. But there's a lot of things. One, the podcast. I mean, we're on a podcast right now. I haven't missed a podcast episode since I started podcasting in 2019. It's a non-negotiable. That's part of the brand. I've seen a lot of people come and go in the podcast space, a lot of my competitors, even my old partners. I've seen a lot of people come and go and start something and then they stop. That's going to affect your brand. Hosting a monthly meetup. We've hosted a monthly meetup without missing one since 2019. I haven't missed one. The only time I missed one, and
we were just talking about this before the call. Hosting those meetups, that's just not a couple of beers for buddies. Like, that's a serious investment. You're getting ready to do that with the annual Christmas party coming up, where I know you've got a lot of people coming in. How have you seen that as an investment versus just a get together with some buddies, and how are you making sure when you're doing that it has some ROI?
Yeah, absolutely. So we haven't missed a meetup since 2019. I started hosting this meetup before I even owned any real estate. There's not a big ROI in terms of like, oh, we're getting a bunch of investors out of it. We get a couple investors here and there, but we don't host it because of that. We host it because it's the community that we're building. It builds a lot of trust, even for the folks that don't come out to our meetups, because people see us. Like, when you guys go out there and host meetups, you go out there and host podcasts, people that don't listen to your podcast and people that don't go to your meetup, they still see you hosting these meetups every single month like clockwork. They still see you hosting a podcast every single week like clockwork, and it builds a lot of trust. In addition to that, it's paying your lenders on time. All your bridge lenders, all your perm debt lenders, all your sellers that finance your deals, paying all those people on time, paying your investors on time. We've never missed a lender payment. We've never missed a investor distribution with Sommers Capital, like ever. And so that goes a long way in terms of building the brand, building trust. We talk about one of our hotels getting flooded out. Yeah, we one of the properties that we bought was in San Diego. We did a $1.4 million reno. We did the relaunch in December of last year. And then in January, we had record rainfall, and a lot of buildings in downtown San Diego, including my podcast studio, got flooded out. We lost 6 rooms due to water damage to this, like the record rainfall in 42 years in San Diego. It's part of the game. Insurance didn't cover a dime. We had to shut the hotel down for a portion to get it back online, and it cost us a lot of money. But guess what? Our lenders still got paid. Our investors still got paid. I funded that with other streams of income because I would rather lose my own money than lose investor money, lender money, because I want to play this game for a long time. I want to build a big thing. And all those things, the podcasts, the meetups, the team, the brand, the social media posts. I'm doing, a lot of content every single day. We're sending a lot of emails every single week. I think between the hotels, the brand, the social media, different platforms that we're on, the podcast, we're putting out like close to 60 pieces of content, 70 pieces of content every single week. We don't stop. And all those things that I just alluded to are part of your brand. And when you do that over months, over years, over decades, that's how you build it.
That's incredible. You also often hear people say like your net worth is your network. That ability of that net to be able to, trust and rely. Like when you need something, if you've paid it up front, you can make those calls. What are you doing right now that you're most excited about that you're currently working on?
I'm really excited about 2025, man. So we got 26 days remaining in this year. I am really, really starting to do a lot of deep thinking right now of what I did wrong, what I did right. This is a year of learning for me. We did a lot of things right. We did a lot of things wrong. And I'm getting really clear on the bottlenecks that I need to eliminate next year that are going to allow me to double down on what I'm good at. And what I'm good at is building the brand, the podcast. We're great custodian of other people's money with Sommers Capital. We're great at raising capital and multiplying capital for our investors. The ability to raise and multiply capital is the highest value skill in the world. And so we are going to double down on the brand. We're going to double down on the audience. We are going to continue to grow our investor database. We're going to continue to grow and scale Sommers Capital. We are going to continue to grow our mastermind community. And we're going to continue to inspire a lot of people through our content. And so I'm really excited about next year. I'm very excited to see where next year takes us. But next year, we're gonna really see a lot of growth next year. I'm really excited for it.
I'm excited too. Yeah, you guys are just getting started. We're glad to be a part of that, and hopefully be along the same train of doing that.
And real quick, Zeke,
yeah.
For the listeners that don't know, I mean, look, we got the greatest transfer of wealth in American history about to go down. I mean, they were already calling this the greatest transfer of wealth. 40 million boomers are retiring in the next 6 to 7 years. Think about that. 4.8 billion people use social media. A lot of real estate's going to change hands in these next 5 to 7 years. A lot of businesses are going to change hands. And so for anyone out there listening to this right now, if you're looking for your opportunity or you're stuck and you don't feel like you're growing and you're looking for that shot, and I'm telling you right now, it's happening. And love them or hate them, we got a real estate investor taking over the office. The Republicans are controlling the Senate. The Republicans are going to control the House. And there's going to be a lot of policies put in place over these next 12 months that are going to favor people that get out there and move the needle, real estate investors, business owners, people that are creating jobs for people. And the last thing I'll say is this: the bar has never been so low for those who truly want it. So if you're looking for your shot, it's happening. Get ready. The opportunity is out there. You just got to go find it.
Yeah, I love seeing some entrepreneurs come in and take over the White House. You probably saw this last week. Trump brought on Elon Musk as well. What are your thoughts on that? How do you think that'll start to impact and affect the next few years?
I think it's great. I think we got folks in that are actually capitalists running the country. And I'm a big fan of capitalism. I'm a big fan of free market. And I'm a big fan of awarding those who work and improve. I think that there's a lot of fresh energy in the air over the last 4 weeks since the election. And there's a lot of things to be excited about. We've been in a high rate environment for the last 30 months. The fact that the real estate market in most major markets around the country has been relatively untouched, although that we've been in a high rate environment. The rate environment has more than doubled for 30 months now. And I think there hasn't been a big crash is really a testament to how strong the real estate supply and demand fundamentals are across the country. If you look at the demand side, we got boomers that are living longer, they're not moving, they're not selling their homes and moving off to retirement homes as early as they once were. The millennials are all starting families, they're buying their first houses for the first time. And then the Gen Zers, which is even bigger, they're all moving out of their parents' house for the first time, looking for apartments to rent. And so the demand has never been this strong. And then from the supply side, I've heard a lot of different numbers out there, but most articles will tell you we're between 4 and 5 million housing units short to meet the demand. But this does not include the 30 million dilapidated homes across America that are not livable, they're not rentable, they're not bankable to that equation. And so we're talking potentially 35 million housing units short from a supply standpoint across America. And the new housing starts right now are at an all-time low. The rate environment's been high. There's a lot of doom and gloom that's been in the air over the last 30 months. A lot of builders are taking pause. The cost to build has gone up. The supply demand fundamentals look strong. And don't forget, the Fed has printed 80% of the money supply in the last 4.5 years. A lot of that money has been off the playing field. It's been on the sidelines because of long-term government bonds. You can get 4% risk-free in a CD right now. As the rate environment normalizes over these next 12, 18, 24 months, a lot of that money is going to trickle down. The government's going to continue to print more money over the long term. And I'm telling you, real estate is the best hedge against inflation. So I'm excited. The opportunities happen. I'm just fucking pumped on life, man. I'm pumped on the opportunity out there. If you're a business owner or real estate investor, you're thinking about starting a business, there's a lot to be excited about. I'm amped, Zeke.
Well, I think that is a good note to leave on. I think there's a lot of good things coming down the road. 2025 should be best year ever. I'm looking forward to making a few of those swings and then watching your group as well. So I really appreciate your time, your input, your wisdom that you're giving out there. Thanks for taking the time to hop on Radical Hospitality Podcast.
Zeke, just the beginning, baby. Appreciate you having me on, and I can't wait to see you and Amy dropping like it's hot next week out here in San Diego at our holiday event. Thank you so much for having me.